joins me from South Africa. It is good to see you, Fani, as always. You're always smiling, even when the economic news is pretty dreadful.
Well, we have to keep our heads up and be hopeful, Richard. Good to be here.
Right. So if we look at the way, you obviously have two, you're a lender and you're a fund manager. And obviously as interest rates have risen, that has complicated the, if you will, investment choices that people have to make.
Yeah, very much so. From a banking perspective, clearly banks have benefited from higher interest rates, but as interest rates continue to go up, you get to a point where they begin to affect clients negatively, and you start to see clients getting into trouble and therefore impairments rising. On the investment side, the choices that investors have and that our private clients have are obviously a lot wider. Generally, there is a sense of risk within the overall market environment, and people from time to time at this time would prefer to have their money in cash because they can earn some high rates on their cash and not have to take the risk that they would be exposed to in a stock market.
You see, cash now can provide quite a decent return.
Absolutely. Remember that rates have gone up in the US by more than 400 points, in South Africa around the same. So the yield on cash is quite attractive. Clearly, you also have bond rates having gone up pretty significantly. And because the economy has been under stress, the performance of corporates would generally be under strain as well.
What worries you most now? I mean, actually, it's a difficult question when you think about it for South Africa. There are so many things that could potentially worry you, not least of which is the electricity issue. But what's top of your worry list?
Look, from a South African perspective, there are three critical issues we have to solve in the short term. The first, obviously, is the electricity problem, because that constrains growth pretty significantly. Over the last 3-4 months, we had lower levels of rotational power outages, and we saw the economy grow at about 0.6%, which was higher than what has been expected. It shows you what we can get if we do fix the problem. So in the short term, we are getting involved as business to try to help government to solve that problem. The second big problem in South Africa would be around logistics, because we cannot get goods to the ports to export. As you know, South Africa is a commodity economy, so we are losing out on revenues that we otherwise could have had. The third issue is obviously crime and corruption. Again, business is trying to help government in addressing these issues. At a more micro level, clearly the fact that interest rates are very high, economic growth is as low as it is, means that clients may be under pressure. So those would be some of the issues that would be concerning to me and to other business people in the country.
Are you seeing increases in non-performing loans? Are you seeing evidence in the loan book that suggests there is something really nasty out there?
Look, we had indicated to the market when we reported in May that we would expect that clients would come under some pressure. But our clients are in the top end of the market, and our clients are fairly robust and resilient corporates on the corporate side. So while there is a level of increase in stress, we are not seeing the kind of levels that would worry us as Investec.
How far can you take Investec out of South Africa? Now, you know, obviously you are out of South Africa, but if you look at you're a South African company, you're a South African rooted company, but your best opportunities may be elsewhere.
We have a number of growth opportunities. In South Africa, we continue to grow our mid-market penetration. We continue to grow our private clients penetration. and we have seen significant growth in our corporate banking business, particularly in infrastructure and project finance, because these are the areas where the private sector can intervene to support growth. In addition to that, we do have a business that lends into certain African clients beyond our borders. Growth rates are much higher on the continent outside of South Africa, so there's an opportunity there for us to grow. We obviously have a large business in the UK, and that business has grown particularly strongly over the last 3-4 years, and we continue to increase scale. So we do see that contribution from our businesses outside of South Africa would be close to 50%, and we report it as such in May.
Good to see you, sir. I look forward to catching up with you in South Africa.